Hey traders, this is Jeff with ZenTrader.ca with the market update. I want to talk about today's bounce uh, and discuss whether or not I think we can go much further. Uh, Here are my thoughts. I was expecting a bounce. I think the strength of today's bounce is telling me that we're not going to see that much more. I think it would have been better had we got like 100 points on the Dow, maybe 20, 30 points on the Nasdaq over the course of one day, and maybe another day, like maybe a consolidation day, another day like the first day higher. I just think that this is just indicative of what's the word I'm looking for? A violent counter move to last week's move, if that makes sense. You can see here on the 60-minute RSI, we haven't gone above 70 yet. I would say the best thing for the bulls would be for this to kind of pull back a little bit and then kind of make another thrust higher. I think if we had another day, not even half as strong as today, I think that might be enough to trigger my shorter term signal to give us a signal to get short again. I'm really glad that I covered 75% of my shorts last week. I have no problem sitting through this a little bit, especially with what I see in a few charts. Let me get to the Dow is even weaker than the Nasdaq. Technically, from an RSI standpoint, you can see we're only at 65 on the 60-minute. We're nearing 69 on the Nasdaq 60-minute, and when you look at the TSX, it's even weaker. It's only at 60, which is typically where bear markets trend between 20 and 60. So I have another chart I want to show you. Okay, this is a Dow daily. I think a lot of people are going to find a comparison to this action here with the June lows, and I don't see that at all. And here's why. If you want to look at the computer hardware index, this is the same index that Apple's in. Apple had a huge move today, totally, in my opinion, irrational. And so you want to look at the June lows in the Dow Jones. So it had this big move down. It was on the heels of a larger move. Let me just kick this out a little bit more so this makes a little more sense. The market had been going up. Actually, I want to kick it out even more. So I want to show you guys something. So yeah, so it had this big move, and then we pulled back the June lows. So when you look at the position of this chart in June, it had a huge run, and then so basically it had given back. So if you look at this big move and this pullback, put it in perspective, it's like 40%. It gave back 40% of that move, went on to new highs, made a little bit of a double top, exceeded it, and then it's come back. Now look at the RSI. Big move up. Like, this is very, very bullish. Pull back, it actually went below 30, which is not a good sign, and then a snapback. And now we're at a lower high on the RSI here. And the reason why I'm talking about this chart is because Apple moves the markets. Apple is what the Nasdaq is going to do at this point in time. And so we're not coming from a position of strength. We're coming from a position of higher highs on this index, lower highs on the RSI, indicating weakness. We come down here. We've gone quite a bit under the RSI than we did here. So I just don't expect any sort of a violent move higher. Go back. I'm running out of time. So I just don't expect this type of a move from where we're at, and I hope traders aren't looking at this and thinking, okay, this is like this means we're going to go higher, because I just don't see that when I look at so many of the other charts that have had so much technical damage, and the fact that we have no leaders showing up. I just don't think we're going to get that much more of a move at all. Even on light holiday trading, I'll be surprised, just given how strong today's move is. So I would just be very careful in this market.